Thanks for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Happy Friday. Yes, indeed, we're coming toward the end of the week, and we're going to take a look at the setup for today's ag trade with a little help from Brian Hoops, the president of Midwest Market Solutions. Now, he is in Springfield, Missouri. And Brian, I see in the overnight trade where we had a little bit of an upward momentum. We'll go ahead and take a look at some of these overnight prices here. I'll start with the corn. Our quotes are provided by bar chart here, but on the corn market, we got into the daytime session here with the December contract 3.5 cents higher at 6.82 3/4. Now, remember yesterday in the grain complex, it was kind of a rough go. Just about everything was lower yesterday. Soybeans did hang on to some small gains yesterday for a while, and you had January soybeans overnight going about 16 1/4 higher at 14.53 1/4. Now, that would be 22 cents off of its earlier low last night, so there's something up with that. I want to talk about wheat here. We'll go to Chicago December, 10.5 higher at 8.51. That's off of its overnight low by about 13 cents. Interesting. Now, on the Kansas City market, you had December finishing up 11.5 higher overnight at 9.52 3/4. And on the spring wheat market in Minneapolis, December 10 1/4 higher at 9.53 1/4. In our cotton market, we had December settling at, I think it's still trading, 85.79, up 279 points. Now, wait a minute, that was almost below 70 cents there, just, I think, the end of last week, and now we're up at 85, got as high as 87.70 last night. That's a humongous turnaround in that cotton market here just in 1 week's time. So, Brian, there's a lot of whipsaw action going on in the ag complex here this week. Explain what's going on, would you?
Yeah, good morning, Marlon. One thing that's not happening is export business. We've not seen any private export sale announcements this morning or, in fact, this entire week. So, yeah, it's definitely a disappointment as far as export numbers go. And then you look ahead to next week's supply and demand report. And, you have to believe the USDA is going to lower their export profile for corn 50, maybe 100 million bushels. I think it's very likely. And if we would see an uptick in yields next week, then you're looking at a real bearish scenario where ending stocks are jumping substantially in the corn market. So I think that's one that you really have to be cautious of. But this week, the U.S. dollar recovered and rallied back to a 76% retracement of its double top and has turned sharply lower from that level. And so overnight, we're down sharply in that U.S. dollar index. And that's, I think, what's driving a host of commodities higher this morning. You mentioned cotton being higher, but also all the grain markets, as you mentioned, crude oil sharply higher again this morning. And that's what I think is the big factor, is these outside markets really pushing some money back into the commodities or into the grains, at least right at this time anyway, with the dollar being lower.
We had some jobs data out this morning, correct?
Yes, they came in a little better than expected. Unemployment did rise to about 3.7%, but we had much better jobless numbers or jobs being created this last month than what was expected. And so the stock market had a positive reaction, and I think that contributed to the weakness in the dollar as well.
What's your take on the wheat? Some say that most of the beneficial moisture is going to miss the High Plains area. What do you think?
Yeah, for the most part, I think some of these dry areas are going to remain fairly dry. It'll be beneficial, no doubt, for areas that get the rainfall that should be starting tonight. Technically, wheat fell yesterday, kind of on the news of the rain until a technical support area and bounced off of that area. The new crop, Kansas City, right around 916, it found support and has rallied yesterday, and then again overnight this morning to get to higher prices. And so we're kind of discounting some of that rain already. We factored it in. Now we're discounting it because it looks like it is going to miss some of those key growing areas.
Okay, we'll come back and discuss our livestock trade here on a Friday when we come back. Our guest, Brian Hoops, don't go anywhere. We'll be back after this. We're back talking with Brian Hoops of Midwest Market Solutions. If we bring up our livestock summary from yesterday, Brian, I was going through the notes from yesterday's trade, and remember how the day before we had some sales, cash sales of cattle out in the Southern Plains, and they were, I believe, $1 under what we had last week. Well, yesterday we had them, I believe, all the way from 149 to 152. Yep. I guess I'll call it steady to firmer or steady to higher compared to what we had maybe Wednesday. But compared to last week, definitely steady to firmer. Dress basis sales, it looks like they're about the same as what we had the day before. We'll call it about 240 to 243. So still, regardless, you're going to be higher than last week by $1 or $2 at least, right?
Yeah, that's right. On the dress basis, on a live basis, it's that steady to firmer tone that was kind of forecast early in the week, and that helped to rally the futures market yesterday. It did appear on Wednesday, I think we talked about this yesterday morning, that that 149 trade was for some cattle maybe that were discounted a little bit and just not as good quality cattle, so they didn't bring quite as much. But yeah, it looks like we're going to be steady to firmer for this week. Packers are killing another big week this week. It looks right around 670,000 head, depending on how many are slaughtered on Saturday. It looks like that's always a good number if you can kill that many cattle. So it still appears Packers need this cattle. They have margins to work with, and cutout value still being pretty strong here into the middle of November. So it looks like cash trades should be firmer, probably again next week, as Packers still have that desire to kill cattle.
Brian, is it possible that the Northern Plains cattle are bringing more money just because they are closer to the source of good corn supplies?
Well, it's certainly possible. They may have, more accessibility to the corn supplies out in the Northern Plains areas. And we've also noticed a jump in cattle weights, which is not something you would expect this time of year relative to a year ago, especially with tight corn supplies. So it's something that certainly I think bears watching. But we've seen cattle in the north trade at a premium to cattle in the Southern Plains pretty much this entire spring and into the summer time frame, and now it's happening again this fall.
Okay, so looking at our close yesterday on the live cattle, these quotes provided by bar charts show December closed 55 higher at 151.95. Beyond that, everything was just kind of narrowly mixed yesterday. On the feeders, we had the November 92 lower at 178 with a rebound in corn today. It's hard telling what it's going to do. January, we're down 57 on the close yesterday. And on the lean hogs, we finished up with December just 7 cents higher at 83.37, but all the other months were roughly on average about a dime lower beyond that. So it should be an interesting trading session here today, to say the least. And looking over at the Dow, it looks like, the Dow is up about 300 points here this morning. We'll see if that's a factor too. Brian, thanks for all the information and have a great weekend out there. Appreciate the help. Brian Hoops of Midwest Market Solutions. Janet, we're about ready to begin.